Hey everybody, on today's episode, we're going to be discussing yet again one brand new loan program that's going to help buyers secure a much lower interest rate in today's high interest rate environment without any money out of their pockets. Now, if you've never watched this show before and don't know what a 2-1 buy down program is, I highly recommend you go back to one of my latest episodes where I discuss it in a lot more detail, because today's episode is going to be building on top of that. So if you don't know what a 2-1 buy down program is and you're watching this on YouTube, feel free to check out the video right up here. I linked it above. If you're not watching this on YouTube, just go back a few episodes and you can search for the one that's titled the most popular loan product on the market right now. And that's going to give you everything you need to know about 2-1 loan buy down programs, as well as some examples so you can get better understanding of when it's used. Now, in today's episode, I'm going to be talking to Dennis from eMortgage Capital, and we're going to be going over a brand new way and a brand new type of 2-1 loan buy down program that's going to, again, help buyers secure a much lower interest rate without any money out of your pocket. And we're going to go over some examples of exactly how this works so you can better determine if this type of loan product would be a good fit for you. So let's go ahead and get into it. Hey everybody, I want to go ahead and welcome Dennis from eMortgage Capital today. Dennis, thank you for joining us on the show.
Thank you for having me.
Absolutely.
Appreciate it.
I'm talking to a lot of lenders lately, and I wanted to bring you on specifically because we just had a conversation, what was it, yesterday or the day before? There's a new product out there that you are offering that I think might be helpful for a lot of buyers right now. So we've talked about 2-1 buy downs on the show before and kind of a little bit about what that is. But one of the biggest disadvantages of these 2-1 buy downs is that the seller always had to pay the cost of these buy downs. So your program that you were telling me about is now allowing lenders to cover some of these costs. So I just wanted to kind of go over what that exactly is, how this kind of works, and just give us some more information about it so buyers can understand that there are programs out there where if the seller decides I'm not paying for anything, you have to buy the house that it is, or maybe you'll pay for a little bit of the buy down, but not everything. There's still options out there for them to be able to use this product to get into the house. So can you kind of give us an overview of what the 2-1 buy down program is a little bit, but more in lines of how exactly lenders are going to be able to use this credit to be able to help buyers out?
Yeah, exactly. So just like you're saying earlier, it was mainly seller concession we can use to do these buy downs. Now they actually updated, most lenders updated and allowing us to use this a lender credit also, and we can actually use a realtor credit as well. Okay. So or any interested third party in the transaction. So we could use not only seller concession, right? So because that.
Gotcha. So does that include like gift funds and stuff for like, so if someone's parents wanted to contribute a little bit of money to help them buy down the rate, is that something that's doable as well?
I mean, that would go more towards, I would just use that as a normal gift in that case. Okay. Yeah, mainly lenders and realtors that can help out. Okay. On certain purchases that we see now, like we don't get a full seller concession. Maybe let's say we need 14,000 in seller concession to do a buy down. Maybe they can only get 10. Okay. Maybe the seller is saying no, so that's when it's good then to use the rest, for example, from the lender or from the realtor. Whatever we can do to make the deal happen.
Okay. So can we kind of go over some of the scenarios so people can actually see what their monthly mortgage payment would look like? So obviously, with the lender paying for some of this, I'm assuming there's going to be some costs involved, whether it's a higher percentage rate or there's a bit more fees involved to be able to do this. So can you kind of give us an example of, let's say, maybe the lender has to pay $5,000 towards or something like that, $5,000 towards this buy down program. What does that do to the overall mortgage payment every month to be able to get this done versus the seller coming in with everything?
Yeah, so we could definitely look at that. So let me pull up, should we use a $800,000 purchase, for example, then with a 20% down? If we wanted to use then 2-1 buy down with lender paid, so this on 648 loan amount, a 2-1 buy down, meaning then first year is 2% lower than what we lock in. Let's say we locked in today. So let's say the rate is 6.5 right now. First year, the buyers are gonna have a 4.5% rate. Second year, they're gonna have a 5.5% rate. Then third year, they're going into the 6.5% that we locked in. Most likely, we've refinanced them by then. Yeah. Most likely, right? If I think the rates are gonna come down, before that happens. So yeah, let's use that. A lender paid, it would cost then, the actual buy down cost is 14,500 roughly. Okay. So let's say that the seller only gives 9,000 in concession. Then we would have to use the rest from the lender. Rate would on that be about 7.125. Okay. Compared to a 6.5 if the seller can come up with everything, right? So it's going to be a little bit higher just because we need to go up in rate to get enough lender credit to cover the full buy down. In monthly payment on that, 6.5% rate compared to a 7.125 is around $260 roughly. Okay. That's the difference in monthly payment. That's the premium, definitely basically. So it quite the difference. Yeah. But if you can't get it right, if you it's either doing the lender paid or not do it at all. Okay. Right? Because if the seller concession isn't there, we can't cover it unless we use some of the lenders. So because then you still get a starting rate of 5.125. Gotcha. Which is way better than anything else out there right now. Yeah. And then so with that on the higher rate, so basically if you do have to have you come in with a little bit of money on the lender side of things, then the buyer needs to qualify, I'm guessing, at that higher 7.1% interest rate in order for them to continue with the loan. Would that be correct? Correct. Yeah, okay. Correct. We always go off of the actual rate, not the buy down, because how it really works is that the credit, the seller credit or the lender credit or whatever, however we set up the loan, is basically being put into a separate account with the lender, like an escrow account. Mm-hmm. And then whatever the buyer is paying every month, then the lender takes then a little piece of that escrow account to fulfill the full payment. Gotcha. So they still are technically on the 7% rate, or in this case, right? Mm-hmm. It's just that some of it is being paid from that escrow account each month. Okay. Yeah, and we've talked about this on the show before, but that's kind of one of the big reasons that this product might not be for everybody, especially those that have a large down payment, because you can basically take the same amount of money if the seller is unwilling to give it to you, or if they are giving it to you, maybe you can use that towards closing costs and something else, and then just take that money, put it in an account, and pay the extra couple $100 a month, and effectively do the same type of thing. So yeah, you kind of set up your own buy down in a way. Yeah, and then you can put it in an account that at least gets at least some type of maybe interest on there. So you're making a tiny bit of money while it's sitting in that account on there. Okay. And then, so that 2-1 buy down program, it seems like that's probably the most popular program right now that most people are using to try to get these rates a little bit lower while they're waiting for rates to come down. Obviously, you're getting approved at the higher amount. These are not variable interest rates. So I've talked about this before in the show as well, is it's not something that you don't know what your interest rate's going to be in 2 or 3 years. You know exactly how much your payments are every single year, and you're going to be qualified off the highest payment. So for those of you thinking this is 2008 all over again, where people all of a sudden had payments skyrocket, they couldn't afford their home anymore, this is not those type of programs. This is just helping you for the first 2 years to be able to get that lower rate, in hopes that, as history has shown, when a recession starts to happen, typically interest rates are going to come down by the end of the recession, which is what a lot of people are banking on right now. And it's happened 100% of all the recessions since 1980. However, it's not a guarantee. So you always want to make sure as a buyer, you're comfortable with that higher payment on there. Yeah, I think that's important to what you're saying right there. You're not going to, as a buyer, don't think about the lower payment of what a great payment. That's the maximum I'm comfortable with paying. You have to, think about like, what worst case, right? 3 years from now, what's the payment I'm going to have? Then is that something I'm going to be able to afford or not? Exactly. And then one thing that I haven't brought up a lot, but something that you want to bring up as well, is that
if you go to refinance, let's say home prices do start to continue to drop, because they are dropping right now in a lot of areas, not significantly, but a little bit, and they continue to drop for the next 6 months, and all of a sudden 6 months from now you want to refinance. Well, if you purchased a home and your home is now worth a little bit less, even if it's not by much, trying to refinance is not going to be an easy thing to do, because your home's going to be worth less than the loan. So you have to understand too that if home prices continue to fall, these products do work, but you have to be careful, because it's not an automatic that you're going to be able to refinance if you don't have the equity in your home to be able to do so without bringing in another lump of cash to be able to do. Is that pretty much in line with what you're telling people?
Yeah, correct. Especially people that are putting in, a lower down
Oh,
payment, let's
yeah.
say it's 3% or 5%, right? Then it's
Yeah.
a little bit riskier if rate, home prices continue to drop.
Yeah.
The ones coming in with 1% or more, right? They are a little bit safer, because even if home prices drop, so they don't have the 20% equity anymore, they might still have 15 or 10% equity,
Yeah.
right? So we can still refinance them. The only thing that would happen is that they would have a little bit of mortgage insurance,
Yeah.
which might still be a better option. Drop the rate and have mortgage insurance compared to keeping the higher rate. So there's always options we can look at.
Okay, perfect. Yeah, so that's just something, especially those using a lower down payment, just to keep in your mind while you're going through these programs on there. Now, the other thing that I did want to bring up is that you also have programs out there that are 3-2-1. So these ones
Yep.
are not going to make sense for everybody, because they tend to be more expensive, like we talked about off camera. But can you
Yep.
kind of go over a little bit about the 3-2-1 programs, and maybe when it might make sense for someone to look at one of these programs versus the 2-1 buy downs?
Yeah, absolutely. Like you're saying, it's a lot more expensive. It's basically twice the amount to
Mm-hmm.
buy it down than 3% first year, and then 2% and 1% the third year. Only time it really would make sense if you get that seller credit, or if
Okay.
I wouldn't really use the lender credit on these,
Okay.
because the rate gets it gets
Crazy.
up there.
Yeah.
So I wouldn't, it's going to be pretty expensive loan. So unless you can get a seller concession, or potentially a realtor pitching in or something, then I wouldn't go for this one. The 2-1 is enough in my opinion.
Okay.
The 3-2-1 gets pretty expensive if you go the lender paid option.
Okay. So this might be good for someone that, again, doesn't have a lot of cash on hand, might be bringing in a lower down payment, but they can find a great deal, get a seller to
Mhm.
maybe be able to cover, instead of 14,000. I think you were saying it could be close to like 28,
Yeah.
$29,000, something like that. So if the seller is in a position where they need to sell and they need to give credits and they just want to get rid of the property, this could be an option for those buyers that are putting a low down payment in, to be able to get a really low interest rate for the first 3 years, basically. And then that gives you a little bit more run rate to refinance later on, because you have a lower rate for 3 years instead of 2 years. So I would say in my mind, those are probably the most desirable type of buyers to look at these programs, are the ones that have those low down payments, that are
Yeah.
finding those properties out there, especially as we're going to the holiday season, where you're having a lot of sellers at this point trying to debate, should I keep my property on the market? The holidays, I mean, it's Thanksgiving at this point when we're recording this next week. So do I want to keep my house on the market when I have family and friends over and we have open houses and people walking through my house? A lot of people are at that point where they're saying, should I sell? If I do, maybe I'll take a little bit of a discount at this point just to get it off so I can get it sold before the holidays. So there are those type of deals out there right now, especially with sellers being a little bit scared of what's going on. You could find the right opportunity that would be able to make this make sense for you.
Correct. Yeah, we definitely see that out there. It's a buyer's market right now. We have a lot of price reductions,
Mm-hmm.
a lot of seller credits, but we've also seen then just that's why the lender is coming out with this, that sometimes the seller credit isn't covering the whole thing, so that's why they do this change.
Okay. So yeah, I mean, that basically seems kind of to wrap this up, is that this is just one more option and one more way out there, where if you do find the right home and you aren't able to get the full seller credit, there are still available options now, which you didn't have a few months ago, where you can kind of structure it where you can have the lender come in with some extra money, or a realtor come in with some extra money, to be able to get you into this house, get that lower rate for the first 2 or 3 years, depending on the program, and be able to get you into a home in the hopes that you can refinance later. And again, You just want to make sure that you're comfortable with the higher payment. So I think that pretty much wraps up everything I wanted to talk about. Like I said, I just wanted to bring you on because it was something I haven't heard of yet in terms of lenders being able to credit this. So I want to make sure that everybody that's thinking about buying a home in the next couple months at least knows these type of programs are out there. So Dennis, what is the best way for people to contact you if they want to get some more information about these programs, or just want to have maybe a general conversation about the whole pre-approval process and just get that started? How is the best way to reach out to you?
Yeah, email or text or call works. Maybe you can drop it in the notes section or pop it up on the screen. So dangstrom@emortgagecapital.com or my phone number 949-945-4964. Either
Perfect,
of those works.
Okay, perfect. Yeah, and I'll put that in the comment section or a bio, or depending on where this is posted on there, so you can find his information, reach out to him if you have any other questions about the whole process. He'd be happy to help you out. So Dennis, thank you again for joining me today. I really appreciate it. And until next time, everybody, stay healthy, stay happy, and I'll see you on the next show. Bye.